Did you know there's a hidden signal in the market that top traders use to predict price moves? It's called a fair value gap, or FVG, and it points to places where the big money, like banks and institutions, might have unfilled orders waiting to be tapped. Now imagine having a tool that lets you spot these FVGs instantly. Today, I'm walking you through an indicator on TradingView that highlights these gaps in real time. It's called the FVG Instantaneous Mitigation, and it could change how you trade by helping you read market shifts before they happen. Understanding fair value gaps. Now let's unpack what a fair value gap actually is. In simple terms, an FVG is a gap left in the market when there's a quick price jump or drop. This gap forms because during that price movement, not all buy or sell orders get filled, leaving behind an unbalanced area on the chart. Think of it like this. Imagine a crowd of people trying to rush into a small store. Some people make it in, but others are left outside because there isn't enough room. Similarly, when the price moves fast, some orders go unfilled, creating an FVG in the market. These gaps are significant because prices often return to fill them, like going back to let those people into the store, balancing supply and demand. In trading, filling these gaps can signal strong movement in either direction. An instantaneous FVG is a special case where this filling happens almost immediately, often within just one bar. When prices correct so quickly, it can suggest a potential reversal or a continuation of the trend. This indicator makes spotting these FVGs simple and shows whether the market might be heading up or down. Hold on! First off, thank you for sticking with the video. You've just taken a major step toward making your trading dreams a reality. If you're tired of juggling through multiple indicators and doing all the analysis yourself, only to lose big in the end, let me introduce you to BitsTurtle AI Bot. I've spent over a year perfecting this crypto trading bot, and I'm confident it will revolutionize the way you trade. Sick of manual trading and watching your hard-earned money slip away? You're just one click away from transforming your trading journey and living on autopilot. Grab the BitsTurtle AI bot from the description below. Getting started. Alright, let's dive in and get this indicator set up. First things first, go to TradingView. Open up any trading chart on any time frame and coins you prefer. Then go to the Indicators tab at the top. Type in FVG Instantaneous Mitigation Signals in the search bar. Look for the one created by Luxalgo. This is the indicator we're focusing on. Click to add it to your chart and it'll appear with some key visual features to help guide you. From here, we can customize it a bit, adjusting settings for a clearer view. Indicator components. Now that the indicator is on your chart, let's go over what all the lines, arrows, and levels mean, starting with bullish signals. When there's a green horizontal line, that's a bullish FVG signal, showing an area where there's a fair value gap on a potential uptrend. The center of this line is known as the bullish average level, which is essentially the midpoint of that gap. This is important because it's a level where the price might come back to, especially if there's a strong bullish trend. If you see a tiny green upward arrow, that means a candle has closed and filled the FVG gap, giving a confirmation signal. Below this green area, there's also a green trailing stop-loss line. This line helps you manage your risk by moving upward with the price, guiding you where to place your stop-loss in a long trade. Now, on the bearish side, it's pretty similar, but in reverse. There's a red horizontal line marking a bearish FVG gap, which highlights a potential downtrend area. The center of this line is the bearish average level, the midpoint of the bearish FVG. You'll also see a small red downward arrow showing when a candle closes and fills this gap, giving you a signal to consider a potential downtrend. Below this level, there's a red trailing stop-loss ribbon to guide your stop-loss for short trades, moving downward as the price drops. The indicator also has a few optional features in the settings. For example, there's a TP and SL, take profit and stop-loss area that can be enabled. It looks a bit like the standard TradingView long and short position tools and helps visualize your trade's potential. If you don't need it, you can go into the settings and turn it off. You can also adjust the FVG width filter from 0 to 0.1, which can make it more accurate. There's also a bar color option, which I suggest turning off if you prefer a cleaner chart. Setting up trend confirmation. Before using the indicator for trades, it's helpful to identify the overall market trend. This is where exponential moving averages, EMAs, come in. EMAs are lines on the chart that show the average price over a certain period, making trends easier to spot. To get started, add the 7EMA_5MA indicator by Storewise on TradingView. Once added, go to the settings and configure the EMAs with lengths of 8, 13, 21, and 34. For a cleaner look, disable all other options so only these 4 EMAs are displayed on your chart. When it comes to interpreting the EMAs, remember this simple rule. If the EMAs are aligned in ascending order with the price consistently above them, it signals a bullish trend. In this case, you'll want to focus on long trades. On the other hand, if the EMAs are stacked in descending order with the price below them, it indicates a bearish trend, so short trades are more favorable. Long positions. Let's talk about how to use this setup to take long trades. First, confirm a bullish trend by checking the EMAs. They should be aligned in ascending order and the price should be trading above them. Once the trend is confirmed, look for a bullish FVG signal on the chart. This will be marked by a green horizontal line with a small green arrow pointing up, indicating that an FVG has been instantly mitigated. After you spot the signal, mark the average level, the center of the FVG area, and wait for the price to return to this level. Here's a key detail. Let at least one candle form that doesn't touch the average line with its wick or close below it. Once you have that gap candle, wait for the price to touch or above the center line. If the candle that touches it is red, wait for the next candle to be green. If any candle closes below the line, the trade setup is no longer valid. When all these conditions line up, enter your trade. Place your stop loss just below the recent swing, low for protection, and aim for a take profit at 1.5 times your risk. This approach helps you capitalize on bullish momentum while managing risk effectively. Short positions. Now, let's look at how to use this setup for short trades. First, confirm that the trend is bearish by checking the EMAs. They should be aligned in descending order with the price trading below them. This alignment tells us it's safer to focus on short trades. Once the bearish trend is set, look for a bearish FVG signal on the chart, marked by a red horizontal line and a downward red arrow. This indicator shows that a bearish FVG has been instantly mitigated, meaning the price is likely to keep moving downward. Next, mark the center line of this FVG area as your average level and wait for the price to return to this line. After the signal candle, ensure at least one candle forms without touching or closing above the center line. When the price does come back or touches the line, make sure the candle is green and then wait for the next candle to turn red. If any candle closes above the center line, the setup is invalid. If everything aligns, you're set to enter the trade. Place your stop loss just above the recent swing high and aim for a take profit at 1.5 times your risk. This setup lets you tap into bearish momentum while keeping risks managed. So that's how the FVG Instantaneous Mitigation Indicator works. Using this indicator can add a whole new level of precision to your trading. As you practice and refine your skills, you'll find yourself making more confident, informed trades. Thanks for sticking with me till the end. If today's insights on crypto trading strategies grabbed your attention, you're in for something big. Right here on your screen is the next video, packed with techniques to 10x your trading profits. I've got a feeling it's exactly what you need to level up your game. Go ahead, click, and start boosting your gains.